Good evening. Ira Epstein with your SPDR ETF stock market wrap-up. And this wrap-up is for Wednesday, the 24th of May, 2023. All right. So today we saw again Ms. Yellen give her talk, why she's suddenly the spokesperson for the Biden administration on the negotiations, sort of beyond me, and I think it belittles her position as Treasury Secretary. I think that that's a political thing. I understand Mr. McCarthy. He's the lead negotiator for the Republicans. But Treasury Secretary Yellen isn't. She's a spokesperson, period. Our treasurer. Why is she suddenly the Biden administration spokesperson? I don't get it. Does she know what she's talking about? I have my doubts about that in terms of the negotiations. The one thing nobody wants to see is the default. Now, I wrote last night in my letter, not tonight, but last night, and I warned that the rating agencies, they're going to come after you. I didn't expect that it was this fast. It's today. So Fitch, after the market, put the U.S. on warning notice. It's one step away from a downgrade. The others won't be left behind. Moody's, S&P, they'll be right behind it. That's how this works, okay? That's why they get paid the dollars they do, because they have to be accurate in their ratings, and we're there. And they're right to put the notice out of the warning. We're one step away. From what McCarthy said, I don't see that there's been any headway in terms of both sides backing off their positions. In fact, I don't know what they agree on other than to meet for 2 hours every day or every other day and agree to what they don't agree on. So, as we're here, tonight I read another article that in Bloomberg, they go, are you aware that on June 2nd, a Social Security payment of $25 billion has to go out? And I'm reading because I thought it was Wednesdays for most people that get Social Security retirement checks, that's when it goes out. Apparently, there's another day, too. I'm wrong on that, clearly. It's June 2nd. So I said, well, who does that go out to? Because I know it's on birth dates, when were you born? Well, this one's even more interesting. 88-year-olds and those on disability. So I envision the picture with the photo ops of 88-year-olds in the street. They can't eat, they're crying, whatever is going on. The disabled ones, there's no money to take care of them. Maybe you won't even get that because maybe the Postal Service can't be paid. We've seen things like this before. The simplest thing as I see it, and I have said this over and over, and I'm no politician, nor do I want to be one, is the word extension. So what? McCarthy said, if we have an extension, it's a failure. I want somebody to whisper in his ear, you're failing. You're failing. Not that you're not going to get your way, but you're failing to make the deal in a timely manner. Oh, I'm sorry about that. I'll come back to that in a minute for you. And that's really going on. He hasn't been able to get them to budge, and the Democrats haven't get him to budge, and we're all going to lose. Now, if you think real rates haven't been going up, what planet are you on? Mortgage rates are up to 6.7% for a standard contract 30-year mortgage. You don't think that's high? I know that after the close, we saw NVIDIA come out with stellar earnings. I mean, they are the big boy for AI, and the stock was up some 20% in the aftermarket. Whether it'll be there when we open in the morning, you never know. But that was a monster gain, which is good news. It carried the NASDAQ up nearly 200 points in the aftermarket right now. But remember, it's heavily weighted into tech. So a few markets carry these indices depending on the weighting of them within it, and it's not all the markets. You don't believe me? Look at all the red behind me here. Yeah, XLE and USO is up. Well, why? Oh, I forgot to mention that. A 12 million barrel reduction in the EIA number. So do you think the Biden administration has any shot of getting that oil under 71 in WTI anytime soon? When they finally came and did it, I said, you watch. This is what I said. It's in these tapes. They won't get any. You're at $74.50 now. When you look at the other parts of the market, Rivian was up a little bit, so that's not bad news, but Ford was down, GM was down pretty good. So it's not an easy time there. Now, Southwest Energy. I brought this up because I happen to think that you've seen an important set of lows in natural gas. And that could be called a triple bottom. There's many things that you can call this. If you like learning these things, my charting course teaches all that. But what you have in the pattern is now a pattern of lower highs, lower lows. So just in terms of is the trend up or down with no filters on it, the trend is down. Definition of a downtrend is lower highs, lower lows. And obviously you look at the time frame. Are you on a daily chart, a 5-minute chart, a 1 week, a 1 month chart? There's many ways to look at it. But by any definition that I know of, that is a downtrend. When you start filtering it, other things happen. Number one, from my perspective and what I teach is when you're over the 18-day average, you have a bullish bias. It is a filter on the swing line. When the trend is down here on the swing line, but the bias is up, the two counter each other. So what had been a market initially I thought might be resistance has fallen back, and the question is, can the 100-day average that it's sitting on become support? Maybe. But the bias is going to be up and the trend is down. Can anything on this tomorrow turn this bullish? No. Because this low took out the one over here, even if you just soared higher, you'd have a lower low, higher high. Where did the market peak out? Have you taken my enhanced Bollinger Band course? Because you're going to get it for free if you stay with me right after this. I'll show you how that all works. You hit it there. I think the pros came out right there. I know you'll say they left some money on the table. So what? That was where if they were long, they took some money and you're right back to where that was within 3-4 days. You're overbought. So I'm not seeing a clear pattern there at all. In Schwab, I know that, I think that we have seen the lows in many of those markets. It would take something in the debt ceiling to ruin this. It would take some crazy Fed action to ruin it. Barring that, I think the banking crisis as we knew it, the worst of it is over. Could remnants come back? Well, if interest rates have to keep going higher, it certainly could. Why do I say that? Because I haven't come to the conclusion that the Fed is going to pause, as so many people have. I'm of the conclusion with many of the Fed members, I'd say the majority, that the data that's coming out right now is beyond crucial. If you get weak jobs data, weak CPI, I think you're going into the pause. If you get strong jobs data, strong CPI, and we either have an extension on the debt ceiling or a deal, I think the Fed goes to 25 basis point hike. If you have a nightmare on the debt ceiling, the Fed can't raise rates. They're not going to raise rates as everything's coming apart around them. So that's the logic that I have at this point. But I like what I read in the Fed minutes. They are doing what we all talked about. It came out today. They want to see the data. Some think, okay, it's time to pause a little, and they gave their reasons in it. But the vast majority want to see the data, and then they'll flip their mind. Have you been listening to the Fed members as they're all talking in front of this? Now, we're 2 weeks out plus before the next Fed meeting, but we're not 2 weeks away from the jobs report, and it's a monster one that you want to look at. The problem is, do you wait on that or to see what the debt ceiling is going to do? I mean, there's so much going on. There's so much noise. And then you have a holiday market on top of it where the trade will start thinning out. It's a rough time. In gasoline, this is where you finally hit the Bollinger Band. I was looking for it to be hit. I told you that yesterday. You now hit it. That's where I think the pros will take money off the table. In other words, the surge that we were looking for finally did come in the gasoline. But I must tell you, not to these prices back here, but pretty close, not bad, okay? Market did sneak back up, and I give it credit for that. In Schwab, okay, I think the market's made something of a low there. Now let's get, if I could, back to where we belong. XLF, higher high, lower low, momentum down, no trend at all. XLI, okay, this is where if you were sitting next to me, you're going to get that elbow in the rib. Why aren't you covering all your shorts? You're not embedded. You're down to the first challenge of the 200-day average and the Bollinger Band. And you go, yes, sir, Ira, I don't need to have a broken rib. NVIDIA, it lost its embedded reading. Now, the only time it can get bullish again, the day after you lose the reading, is the next day if it re-embeds. If it doesn't re-embed, then it stays lost and the odds favor you're going down here. the way it's pumped, over 20% jump. You heard me, a 20% jump. That's monstrous. Wait. I think it was $20 jump. I take that back up. Was it, I don't know, 8 to 10%? I think that's what it really did. I'll have to check it again. But it was strong. And in stocks, you lost the embedded reading as well. Now, they can both get it back, but I had been friendly these markets. Now, I give the market credit and I applaud it. I was wrong this morning and I told traders, don't let this market get away from you. I'm going to wait for the end, and if it appears that it's not going to get back the reading, then in the last hour, I'll take a serious look at the markets. Where should I come out? Because I'll lick my wounds. I was wrong. Not big. $300 stock, $450 stock, minor. Very small losses, okay? Can't win every trade. XHB and the home builders. So we keep hearing that homes are selling, everything's good, and yet here we are back to the lower Bollinger Band. Why? It's evident. What do you think it is? Interest rates for the moment. The debt ceiling weighing on it, going, who's going to buy a house, number one, that isn't in the works already? Number two, where they're getting a mortgage because rates are going up so high that you're shutting down parts of the market. That's what's weighing on it. Not that there isn't the demand there. Get rid of this debt ceiling issue and the game's over. I think you'll see that you come back in that. In the energy, I just am friendly, okay? And I don't want to take on OPEC on this whole deal. Now, they're going to be smiling as they're back up to $78 in crude. That part they'll smile on. But they don't want to be tested over and over. And as I told you, Russia lies. Russia's producing oil like there's no tomorrow and selling it like it's no tomorrow. Yes, at a discount, and they're taking a hit on that. They're selling way more oil for per barrel, less money than they normally would be getting. That's how it's going to be if you want it. If they want to sell it, they're going to have to make that deal. Otherwise, the people will say, I don't need to deal with you on sanctions. I'll pay a little bit more and I'm out of that problem. A lot more, I'll deal with the U.S. so they don't like me. I'm talking as though I'm India or China. That's okay. Make it close to what OPEC is and non-sanctioned members. It's easy to say, we tried that. We'd rather be with you people with the sanctioning right now. So they have to keep their discount. That's how it works. You think the negotiators aren't smart? They know how to work that. In the gold market, very oversold. This is a market that's being weighed on by the strong dollar along with, I want to make this clear, the debt ceiling. The interest rates stay up. So it can't beat the high interest rate and that at the same time. But it's begrudgingly falling. Why? Because the market believes, just as we're seeing around the world, that inflation is sticky as can be, and if you took away those two headwinds, you'd probably be a lot higher in this market. That's my guess. Do I know? I don't know, but that's my guess. Silver, non-industrial metal. You got us hurt. You got China whimpering. Just read the economic data out of there. They're going to have to do something. They're going to have to cut interest rates, tell the banks to loan. They got things to do. But you're taking a beating in that and copper. Copper's down to the 200-day average for the first time, the Bollinger Band. And yes, the magic elbow would go out. Cover your shorts. This is a great spot to do it. On good rallies, take another look at the market for short sales. Bonds, TLT. It's difficult to be short when you're expecting an extension. That's my mental point of view. The right word is the market is still a bear market. I don't know where it will end. It will get a snap rally on an extension, but a real nice rally off a deal. But I don't see the deal happening unless there's things going on behind closed doors that none of us have heard. And you know, all these guys, they leak everything. So I don't buy that there's something going on. In the dollar, the world's scared. When you're scared, you buy the strongest currency in the world. Not that we're doing so well and not that we're a model for the world right now with all that's going on here in America. It's sort of embarrassing. But at some point, we just can't keep spending. I do get that. And I wish the Democrats would get it. You can't keep doing this. You got to get your house in order. If your kid were doing this on your credit card, I don't even want to think what you would do. Well, unfortunately, guess what? Democrats, you're the kid. And we're the adults, whoever we are, whatever political party's left, okay? Stop the spending. Start rolling it back. Yes, you're going to have to cut something. Too bad. That's how it is. This thing's exploded under Trump and Biden out of control. You heard what I said. Two men that it exploded, two presidents. Trump is just as guilty with all this as Biden. FXE, lower highs, lower lows, beating this thing up, and it's not over. And again, this is all having to do with one thing and one big thing, and that is this debt ceiling. So it's Memorial Day sale, and my sales are knockouts. They're short, the 25th to the 31st. Buy any 1 year subscription, and you could have either my full charting course, $400 value. You could have my Bollinger Band course, about $120, or my Outside Day course, $120. Your choice. You can give them away as a gift. You can buy the 1 year and give that away as a gift and keep the course. We'll mix and match, do whatever you want. You can keep both. 5 days. Give you an example. My morning subscriber video is $156. You can get the $400 charting course. I think my morning Spider ETF is about $168, $170. You can get the $400 course, the $120, whatever one you want. So this is good for new, returning, and current monthly subscribers that want to upgrade to a 1 year. You choose. If you do that, terrific. How do you get it? You got to follow my finger. Move your cursor to the top up here. There'll be an icon. Give it a click. It'll take you right to the page that you do it. And you tell us when you want these courses to begin. The research will start right away for you, but the courses, that you just tell us will start at any time that you want. I'm Ira Epstein. Thanks for listening. Take advantage of this, and I will talk to you all tomorrow. Take care.